To the John Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with, well, one of my two co-hosts, Mr. Aaron Clark of Agility. How are you, buddy?
I'm doing good. So it's
Good,
a
good.
reminder of Tuesday. This happened on Tuesday too.
It's like a reflection of Tuesday, but the good news
I
is
know.
tomorrow's Friday. Yeah, tomorrow's Friday. So,
Yeah.
we have even more reason to be in good moods today. All right. Dwight should be joining us here momentarily, so we will make that introduction when appropriate. Well, folks, what a day it was today. When I woke up this morning, as we were told by our president yesterday, it was going to be a day that we were going to, according to his words, really do some severe damage to Iran, severe bombing. That was the thought process. That's what he told us, right? He had enough, and as I said on the show yesterday, he was talking about going after utility plants and bridges and basically a lot of infrastructure. Market kind of took it with a grain of salt. It really didn't panic about it. Oil prices didn't panic or anything like that. And I thought that was, again, very, very strange. And then we get into today. Again, market was under the assumption, and he had made those comments, like I said, late yesterday. And we make the assumption that it's going to happen, but maybe we shouldn't have. And here's why. It all changed today. Mid-session, the president came out and basically said, hey, you know what? I've decided we're not going to bomb Iran. And matter of fact, the Iranian war, the ceasefire has been settled, quote, subject to finalization. And I expect signing in the next few days. Well, Aaron, I saw a stat. I think it was CNBC did a kind of a little recap of how many times we have heard this type of situation where the ceasefire was just days away and the document signing was just a few days away. And every time he says it, the market reacts in a positive fashion. The market absolutely believes him. And it has been numerous times. But according to the president, he said, quote, the U.S. just made a great settlement of the war with Iran, subject again to the finalization of the documents. He said in the Oval Office today that he expects a signing to occur over the next few days, again, repeating similar claims he has made numerous times over the course of the war. This article that I saw about this, I think they claimed that he has said this 30 times was the number that stuck out in my mind. 30 times.
I saw the article.
Did you? Okay. Yeah.
Yeah.
You know what I'm talking about.
Mm-hmm.
No mention about the Strait of Hormuz. He did indicate today that Iran will not have nuclear. But, Aaron, it was, and I'll get to what our show topic's going to be here in a second. What was fascinating about this morning when, again, the world was under the assumption that Iran was going to be bombed upon, as I said. What was interesting is he said something that I have said from day one, and you know it, you have heard it on this show. And that is, we're not in this Iranian war for the fear of nuclear war or nuclear weapons. We're in it for oil. I've said it from day one. And sure enough, he came out today, this morning, again, before he said we're not going to bomb, and said we are going to invade Karg Island. Now, remember, Karg Island, folks, we haven't had to use that in quite some time or mention that in quite some time. If you can imagine, roughly 20 miles offshore of Iran, it's an island, as the name says. But basically what it is, what I want you to visualize, it's basically an oil island, right? This is where the ships come into to load or unload oil. And so obviously very, very critical. Now, if you remember in the early days of the war, we ended up bombing that. I think it was a couple of weeks in once we started. So been about mid-March or so. We bombed it, but didn't hit any of the oil side of it. We just hit some buildings and things like that. But he said this morning, we're going to invade it and we are going to take over the oil, all of the oil of Iran. And I said on my stock update this morning, I said, yep, that's exactly what I predicted from day one. That's what this whole thing is about. Because then he made the comment, he said, this is going to be similar to Venezuela. And look how great that has worked out for Venezuela and the United States. So we saw oil prices really, kind of begin to move around a lot. They kind of went up, they went down, but they were really trending towards the downside because I think oil traders were like, okay, we're going to get hold and control the world oil market, which I think is, again, one of his strategies that, no one is really talking a lot about. But again, he said, we're going to hit Iran very hard tonight, take over the oil infrastructure, Karg Island, etc. And then he reversed course and said, look at, so we're not going to do that tonight. It's my call. We're not going to do that tonight. Netanyahu's office did confirm the conversation that the president had with Netanyahu and other regional leaders about the potential memorandum of understanding with Iran. Yet Netanyahu's office did confirm that later today. It said in a statement that although Israel is not part of the negotiations with Iran, that's critical. The prime minister appreciated Trump's commitment to the final agreement at the conclusion of the negotiations, which will include various restrictions on Iran's nuclear capabilities and other behaviors. So, with all that said, it was a wild, wild ride today. But the amazing thing was this market, as we've said from day one, this market is hinged upon two things: the strength of the AI sector, whether you want to call it chips, software, etc., and the conclusion of this war. And when the president came out today and said, yep, this thing is off, and we got, it's going to have a signed deal in a couple of days, even though he has said it numerous times, the market went, finally, this thing's going to come to an end. And we rallied hard, thank goodness. Best level today, we were up a little over 1,000 points on the Dow. Didn't hold it, hit it just briefly, but we finished very substantially. And so I'll give you, of course, all those details of how we finished in the market, etc. But Mr. Clark, let's get back to what the show's all about today. As you indicated a few moments ago, we're going to get back to the topic that we started on Tuesday, and had a lot of great comments from our audience. And so we know we kind of struck a nerve with all of you in a good sense. And the theme of today's show is really this: how one rental property can become a multi-million-dollar portfolio. And again, I want you to think about the monopoly side of things, right? You get 2 or 3 houses on your favorite landing place on Monopoly, and eventually you go, yeah, enough of that. I want to trade it in. I want to get a hotel or multiple hotels. We can do this in real life. And Aaron is going to tell us how we're going to do that. Because one of the biggest mistakes is this: real estate investors, it's not buying the wrong property. Yeah, that can be a mistake, but it's not the biggest mistake. The biggest mistake is this: you're waiting too long to get big, right? Maybe you're fine keeping 1 or 2 rentals, but if you really want to make serious money, make serious wealth in real estate, you've got to expand. And again, I don't think anybody in earshot, Aaron, has this dream of owning 10, 15 single family rentals, right? Worth millions of dollars. They would rather own maybe 1 or 2 large commercial properties that have a lot of advantages over single families, and again, play the monopoly game. So what we're going to do today is we're going to recap briefly why it's easier to manage bigger properties than it is the smaller ones. We're going to talk about the economies of scale and how you can improve your cash flow. Some of the common mistakes, of course, that people make when they try to grow like this. And then we're going to recap what we touched on Tuesday. Again, why bigger can be better, and then the power of scaling. And we really went down a great rabbit hole, Aaron, on Tuesday, getting into the 1031 tax deferred exchanges. Because if you own a portfolio and have single families and you're like, yeah, it's time for me to get big, it's time for me to want to grow, last thing you want to do is pay unnecessary taxes, i.e. capital gains taxes. So you did, I want to compliment you publicly. You did a phenomenal job getting into the 1031 discussion. And that actually prompted a lot of emails I received from our listeners about that. So I want to make sure we kind of come back, touch on that, and then begin to go into the other areas of how this is going to happen. Sound like a plan?
Sounds good. Let's do it.
All right. Beautiful. Okay, so we're going to get to that in just a moment. Let's get back to the stock market side of things very quickly before I have to go to break. So here's the final numbers after everything I said. What a day. 929-point gain on the Dow. I'm going to round it up. It's actually 929.97. We're going to round it up. 930-point gain. That equates to a 1.86% increase. The S&P higher by 127 points, 1.75%. And the NASDAQ star here up 640 points, 2.54% to close at 25,809. Now, if you recall, it was at this time yesterday that we were, basically licking our wounds because of the damage that was done in the market. And so if we kind of go back and say, okay, how much recovery did we really enjoy today from yesterday's selling? Well, just to give you a refresher, we lost, how ironic, Aaron, 953 points on the Dow yesterday, but we made 930
Covered almost
today.
same amount.
How does that work? And yesterday, the NASDAQ lost 509. Today, it gained 640, so we're a little bit ahead. Yesterday, the S&P lost 120, and again, today we gained 127. So, kind of bizarre how that worked. And all those chip stocks that sold off yesterday, you had Broadcom down $20 and Taiwan Semiconductor down 19. That worry's all gone. You had Intel today up $9.92. Applied Material rising $55.63 a share. Micron up $103.99. I could just go on and on. So once again, all of the worries of yesterday completely gone by the wayside. And I will mention that the chip stocks today were strong even before the announcement that we weren't going to attack Iran tonight. So, it really, it's that short of a summary, my friends. It really is just a situation where this market is driven by headlines. I know people, I know you, I know myself, we're exhausted on these headlines. One day we're going to get worse in the war, and next minute we're fine. We've got a supposed truce coming. But that's the world that we live in at this point. And again, this is why you have a diversified portfolio. This is why, like days like yesterday, you take advantage of some of the beaten up names that are out there, because the fundamentals are still there, as I keep saying over and over again, especially on Fridays when I do my market recap. The fundamentals are there. And oh, Mr. Clark, I should throw in one thing, because I know you watch this very closely. Inflation went through the roof on the wholesale side.
Yeah.
That report in and of itself would have been enough to send us down hundreds and hundreds of points on the market. PPI today came in, this is May's data, up 1.1% month over month, up 6.5% year over year. Highest level that we have seen on PPI, the wholesale level of inflation, going back to 2022, right? Market just brushed it off. Inflation, what inflation? So back to my term, Teflon coated, but we will see. One thing we got to watch really close, and I keep warning all of you about this, is two things. We've got the SpaceX IPO tomorrow. They priced it at $135. That's just what they priced it at. No telling where this thing is going to go. But you kind of get that excitement behind us after tomorrow. And then once again, even if this time it does come true and there's a truce is signed, it's one of those situations where it's kind of, buy the rumor, sell the news. So don't think that, if this thing does get resolved, that this market's just going to rally hard on it. Probably would short term, but long term wise, I don't know. Like I said, it's been built into the market for quite some time that there is going to be a resolution. Welcome back to the John Sanchez Show on News Talk 780 KOH with Aaron Clark of Edge Realty. Mr. Millard is MIA today, to be honest with you.
Literally.
All right, we're going to, kind of interesting. All right, we're going to get to our topic here in just a moment, which is the following: how one rental property can become a multi-million-dollar real estate portfolio. But you got to follow strategies, understand tax laws, etc. And that's what we're here to help you do. But first, let's recap the market. If you just joined us, again, heck of a day. The president called off any attack on Iran tonight. Said a ceasefire agreement's just days away, and the market rallied on the news. Finished up 930 on the Dow, 1.86%. Nasdaq gained 640, 2.5% rise, 2.54 to be exact. And the S&P up 127 points. Oil for the day down $2.12, so not a huge move, 87.81 a barrel. Gold lost $11.30, closing at $4,122.50 an ounce. A nice pullback in the bond market, 8 basis point decline, yield of 4 point. And the 30-year fixed mortgage, according to Mortgage News Daily, lost 3 basis points to a yield of or an APR, I guess, probably not APR, 6.6%. Let's leave it at that. Okay, now let's get down to our topic. Again, very interesting. Let's recap what we, again, covered on Tuesday, just briefly, because we just scratched the surface on our topic. So once again, as I said at the beginning of the show, why do we want to even look at getting bigger, right? It's an economy of scale, and people don't utilize that. I was asking Aaron during the break, and Aaron, I think this is a great point to kind of start. I said, Aaron, in reality, thinking back, I don't think I've ever had a client come to me and say, "Hey, John, I want to get rid of my rental properties and my 2 or 3 rentals, and I want to hook me up with some of your real estate buddies and let's get into some big commercial properties." I've never had that happen over my career. And you kind of said the same thing, that some people will talk about it, but it's hard for them to really move in that direction. So let's kind of start with that before I give you the recap.
Yeah. I mean, I think the concept of it is super interesting, and a lot of people are intrigued by the whole concept. And I think that the idea of the tax savings and all that, but I think it's sort of one of those things where people look at it as a big animal that's overwhelming,
Mm-hmm.
and they think it's just going to be too complicated. And the thing is when we do these, they're very, very simple. They're very, I mean, there's some slight nuances, but overall, it's a no-brainer. And I get that it's overwhelming, and the few that have taken advantage of it, they never look back and go, "Man, I wished I
I
hadn't
want
have
to go
done
back
that."
to 10 rentals. Yeah, dealing with the
Yeah,
public. Yeah,
exactly.
never.
They
Yeah,
all, and I will say it is intimidating. It sounds like
it is.
these
I've done it.
deadlines, like the 45 days and the 180 days and all this kind of stuff, that they're scary, and what if that. We have ways of making all of this work. And in worst case, you could even do what's called a reverse 1031 exchange. And that's where you go find what you want to buy, you buy it and borrow the money up front from the intermediary, and then sell your previous investment and then pay it back. Now, it does cost more, but if you want zero headache, no
Mm-hmm.
worries,
Find the ideal property. You got
yeah,
to jump
you
on
do
it.
everything backwards. And when they say, "Oh, you got to identify 3 and all that," most of the time we just go into escrow on a property. Once we know it's going to close, then we just do all of that stuff afterwards. And we'll even make the sale of the other properties contingent
Contingent. Yep.
upon the successful close of the first one, and we'll make them close within a day or two of each other.
So
It's
so
not hard to do.
no. So let's back up a step. What Aaron's talking about is, and this is where we left off on the show on Tuesday. Excuse me. We got into the 1031 tax deferred exchange, and for those of you not familiar with it, again, this only applies to investment properties. So easiest way to understand, if you're like me, let's do an example. Let's say you bought a rental property years ago in Southwest Reno for $200,000. You call up Aaron and you go, "Hey, I want to sell this thing." Aaron does his market analysis. Property's worth $600,000. Okay, you got two choices. What are you going to do? Why you want to sell? Do you want to get a pile of cash? Do you want to, again, go into more properties? Maybe that one house, you want to try to buy maybe a couple more, or something else in the realm of investment property, and again, commercial. So through Aaron's great consultation, the client says, "Yeah, you know what? I really don't want to, be a landlord of 2 or 3 single family properties. It's a lot of work. Aaron, find me a commercial property." So Aaron goes out and finds a commercial property, and let's just say it's a office building again in Southwest Reno. So they sold this property for $600,000. Now, if they went to sell it without doing a 1031 tax deferred exchange, that $400,000 profit, they bought it at 2, Aaron sells it at 6. That $400,000 profit, of course, is going to be long-term capital gains, assuming that they've owned it for longer than 12 months, right? So between 20 to 23.3% they're going to pay in capital gains tax if they have a decent income. Okay, so that could be expensive. Let's round it down. Let's say it's $20,000, or excuse me, 20%. So 20% of 400,000 is $80,000. They're going to write a check to the federal government. Now if they're in California,
Just
or
gone.
just gone. Now if they're in
Mm-hmm.
California, some other state, and I always have to remind clients about this when we get into this discussion, many states, California being one of them, they have their own capital gains tax, roughly right around 5.5%, again, depending upon where your income is. So you got that. So let's just say, they're a Nevada resident, right? And so they don't have the California tax. But the other tax that I've mentioned it 1,000 times on this show, that I find that many times even CPAs fail to tell their clients about, and it's called depreciation and recapture. So, they've owned this property a long time. The CPA has to go back, tally up all the depreciation that they've taken over the years, total that number up, and then guess what? Aaron's client gets to pay a 25% depreciation recapture tax. So very easy to end up losing close to 40% of your overall profit. Now, when we come back, we'll talk about, as Aaron was just saying, how easy the 1031 tax deferred exchange is. Because remember, folks, there's one great thing about real estate that a lot of asset classes don't give you, and that is you can defer as many times as you want over your lifetime, and then you die, and your beneficiaries who inherit the property, if you could see Aaron right now, he just went like, hands going across
Wiped
like a
clean,
referee.
baby.
Wipe clean. Zero tax. No depreciation and recapture tax, no capital gains tax, zero. So we'll explain that. Now that you understand the 1031, Aaron, let's get into some specifics, the 45-day, the 180-day, and then we'll get into the commercial property side of things. So welcome back to the John Sanchez Show on Newstalk 780 KOH with Aaron Clark of Edge Realty. Again, a stellar day in the market after the president decided not to bomb Iran tonight. Finished up 930 on the Dow. NASDAQ gained 640, and the S&P higher by 127. Once again, oil down $2.12 to 87.81 a barrel. All right, we're continuing our discussion on how you have one rental property, how it can become a multi-million-dollar portfolio if you so desire via commercial real estate. Now, once again, I gave the analogy. You have a single family, you want to sell it, you want more real estate, but you don't want to pay the taxes. Okay, so it gave you how much roughly you would end up paying in taxes if you sold that. But instead, here's how the big money does it. You do a 1031 tax deferred exchange. So, Mr. Clark, let's go down the path of the 1031 again. Repeat what you said earlier now that people understand the concept here a little bit.
Yeah, so the first thing we would do is the property that we're going to sell, we're going to get it ready to
$600,000
rock and
property.
roll. Yep.
Mm-hmm.
And we're going to get it, situated to where we're ready to list it. That's where the strategizing comes in. What do we want to turn it into? So before we're going to put it on the market, we're going to find out what we want to turn it into. And the thing is, in that situation, we want to focus really on cash flow and making sure that the investment makes sense. So we're going to go look for that product. And it doesn't have to be in Nevada. It doesn't have to be in the
Good
same
point.
location. It doesn't even have to be the same type of property. It just has to be worth more as far as what you sold the property for. You have to buy for a little bit more, like $1 more than
Literally a
what you
dollar
sold it
more.
for.
Yep.
Yeah. So you could buy multi-units. You could buy a single family residence. You could buy condos. You could buy a commercial complex,
You
whatever
can
it
buy
is.
a business.
We're, yeah, you can buy anything you want. So what we
As long as
do
it's
is
a
we
business.
want to make sure that your desire of what you're looking for and what cash flow makes sense for you exists. So we're going to do research, strategize, all that. Once we find out, okay, this is definitely something that exists, if it's possible, what we can do is we can pursue that property, write a contract for purchase on it, make it contingent upon the sale of the property that's currently here that we're going to 1031 exchange. And that way we don't have any issues with deadlines. So both of them would close simultaneously because you have 45 days to identify 3 subject properties that you're willing to turn your exchange into. And then you have to close within 180 days. So typically, once we find the one that we go into contract with, then we're going to list the others as the other identified properties, but it doesn't even matter really
No,
at that
I
point.
know.
Now,
Formality.
the big thing in these situations that is sort of the negative thing, which we do a lot of things to shield from, is when you're buying a property and people know that it's subject to doing a 1031 exchange, and they know you're on a timeline, a seller can take advantage of the situation knowing that your hands are kind of tied on your timing. So if you're buying something that has some issues or needs some repairs or whatever else, they know you're in a bind. You don't want to start over. So we have to be really, really diligent on the front end to make sure that that doesn't happen. And the beauty of it is because we're making the purchase contingent upon the sale, if we catch it early enough, the sale hasn't even been completed to where our timeline hasn't even started. So we can abandon ship and move on to the next one. We can keep doing that until we find the perfect property and get into something. There's a lot of strategy that goes with it, but
Yes,
it
there
all
is.
lines up and makes
Yes,
sense.
and
And
again,
it's not hard.
I cannot stress enough, folks. I cannot stress enough, right? I am not a realtor. Aaron is a professional. He's a licensed realtor. All I can tell you is please, if you're ever going to do a 1031 exchange, call Aaron, call someone that has experience because I've seen deals both from the tax side and the actual real estate transaction blow up in everybody's face when the realtor and or the client did not understand the rules. There is no forgiving on this, right? So once again, the 45
None.
days. So as soon as you sell that property, you've got 45 days to identify. Again, you got to list 3 of them on the paperwork. 180 days from when you sell to close. You can't go 181 days and go, oh, I'm sorry, I didn't. And it's
Yeah.
calendar days. It's not weekdays or work days or anything like that.
Holidays don't matter.
That's it. Now,
War doesn't matter.
nope, it doesn't. Nope, not one. Nothing matters. So now,
Nothing.
Aaron, great explanation. Now let's go into where a lot of people also don't understand when they want to get a big commercial property portfolio, and that is the 1031 accommodator. Very, very important organization in the entire 1031 process.
Yeah, so your accommodator intermediary person is the one that's going to handle all the funds. They're the
You still have
third
escrow.
parties.
You still have escrow.
Yeah, you still have,
You have.
so everything runs exactly the same as if you're not doing a 1031 exchange, but we have that person that's like the intermediary ambassador, whatever, of the situation. And so we call them a qualified intermediary. And what they are is they're the exchange company. So they basically are the ones that make sure that everything is done according to the regulations and rules that are required by the government, state, local, municipal, city rules, laws, whatever. So they're going to keep everything on track, and then they're the ones that are going to receive all the monies, because remember, the money can't touch your account. As soon as it touches your account, you've then received the money. You now owe taxes. So the money is going to go into that qualified intermediary. They're going to hold on to it while we're doing everything through the transaction, and then they're going to pay out from them to the escrow company and do everything through them. So they in essence become the seller on your behalf
Yes.
and buyer on your behalf. Now, that's the same company that would do, if we were going to do a reverse exchange company, they'd be the ones that you'd be in essence borrowing the money from to purchase, going backwards, and then you'd pay them back on your sale.
Yeah, I've never done a reverse, so I'm a newbie to that side of it. Same mortgage qualifying
Yeah,
criteria.
everything's the same.
Everything's the
Yeah.
same. Okay,
Yep, everything's the
interesting.
same.
Yep.
Yeah, in essence, your 1031 is sort of like owning part of the property, and then your mortgage is you personally owning
Mm,
another section
right.
of the property,
Right.
or
Exactly.
percentage or ratio. Or
There you go. And my 2 cents on the QI, the qualified intermediary. Find a reputable company. Make sure your realtor knows of them, your escrow company knows of them. There have been situations where there's been, a John Doe, intermediary pops up and they get the money and you never see it again. It's not common, but it has happened. So you want to stick with some of the bigger names and well established. And again, your real estate team will know that. So yeah, so again, goes down like a normal real estate transaction, normal escrow, except instead of escrow paying you that $400,000 profit, then it's going to go to the QI and then they're going to hold it and then they will forward that to the new escrow company when the sale is complete. So, and then from there, you're great. And again, Aaron, what's the tax situation under that scenario?
Goose egg.
Goose egg.
Zero.
The beautiful
Yep.
words when it comes to that. Now, there are situations, Aaron and I should let you know about this, where you can't find a property. So in our example, we again, we used a $600,000 property. So you got to buy something, $600,000 or more. But let's just say, and this happens sometimes, especially if you're selling multiple investment properties where you can't spend enough money. There's nothing available, right? So let's use that example. Let's say that, whatever, the real estate inventory is tight and Aaron can only find you a property for $550,000. So what do you do with that 50 that's left over since you're not spending it? Well, that's called boot. And again, just like if you sold the entire property without the 1031, you're going to owe taxes, depreciation, recapture. Unless, again, I briefly got into this, you can contact me. We have what's called a Delaware Statutory Trust, a DST, which is it qualifies as a 1031, but what you're doing is you're pooling your money with other investors into institutional portfolios, usually multifamily. We've done multifamily, we've done Amazon fulfillment centers, but most common are apartment buildings. We just did a student housing one a while back. So a lot of different things, but it's all institutionally managed. You're not the landlord. The beautiful thing about it, A, it's a 1031 exchange. B, you're no longer a landlord. C, you get a check coming in, usually about 5 to 7 year holding period. So that's kind of the negative side of it. And you actually, whatever percent that you have invested into that pool, you actually get ownership. So you do get some depreciation pass through and a few other tax deductions that you normally would get under normal real estate ownership. So they're great things. The problem that I always caution clients on, if they're good, these deals come and go. They come and go really fast. You never know what's available. There's a limited inventory. So again, someone like myself that deals with these, you want to get involved. Last one I did, I had a phenomenal client, and man, his team, he sold a property in Sacramento, and his agent down there, his 1031 accommodator, myself, the DST company, we're always in communication. Smoothest one I've ever done, Aaron. It's amazing when you have that right team, how things just boom, 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 boom. It was just great. So that's how you do it. Now, when we come back, Mr. Clark is going to say or enlighten us on, all right, we did that. What do we want to look at or look for? What's the features and benefits we want to look for in that commercial property if we're going to do a 1031 exchange so that we can build up this multi-million-dollar portfolio? And like I said, one more time, the strategy that many wealthy will do is they will do this over and over and over. That $600,000 that you just 1031 into, let's say, a small apartment building, let's say 10 years from now, it's worth $2 million. Guess what? You can do it again, another 1031, and then another, and then eventually we're all going to die. And guess what? Your children or whomever will get the stepped up cost basis, meaning all that those previous, tax deferred gains and depreciation recapture are wiped out. At least that's the way the rules are. Welcome back to the John Sanchez Show on Newstalk 780 KOH with Aaron Clark of Edge Realty. All right, Mr. Clark, your phone number, sir, before we forget.
Yeah, 673-6700.
All right. And Mr. Millard, 240-2022 is his number on the mortgage side of things. All right. We've been talking about, again, going from a single family rental to multiple single families to larger commercial properties, right? You want to get this portfolio bigger, multi-millions, so on and so forth. From a tax perspective, we laid out everything that we can share with you, how to minimize or in some cases diminish those taxes altogether. Hey, Aaron, with a couple minutes left, I want to kind of go down this path with you. What is the biggest mistake that you have seen investors make when they're trying to move into larger real estate opportunities?
It's when people will take the cost, the tax savings, the ideal whatever investment that they're wanting to get into, and they look at those things as priority over the cash flow. So they're just trying to get out of a situation to get into another situation that sounds really cool. And they think about the future potential equitable growth in it versus the cash flow. It's always about cash flow. If you're looking at a property and you're not thinking cash flow, then you're looking at it wrong, because the reality of it is you've probably heard the old adage, You want to buy the worst property in the worst neighborhood
Yeah.
to,
Worst property in the best
because you're going to
neighborhood. Yeah.
net the most cash flow or whatever. So it's like you can't look at a property and go, I'm only going to buy something that I'm willing to live in, or I'm willing
Yeah.
to use,
No.
or I'm willing to this. No, it's you're going to buy whatever's going to give you the most cash flow percentage and ratio. And the truth is, that's the most important thing.
It really is. And you know, we started to go down this path on Tuesday, and unfortunately we're out of time again today, so I can't really get into it now. But I think kind of a rookie mistake, Aaron, that a lot of people make is they get into investment property and they think, you know, I'm in it for the appreciation, which God willing, you'll get some of that. Where
Yeah.
if they buy the single family, they're into it more for the cash flow. But keep in mind, folks, your value, and if you go to sell that commercial building, that commercial property down the road, there's three methods that an appraiser will look at to determine the value of your property. And one of those is the income method, right? So they will literally base
Hmm.
the value on the income, to Aaron's point, his very important point, the income that property is producing, and some other factors related to it. So again, if your plan is, I want to hang on to this maybe for 5 years and then I want to sell it, get that income up. And folks, to be honest with you, this is the strategy that institutions will do. They will come in, they will, what we call, put lipstick on the pig. They buy undervalued properties, they rehab them, put money into them, get those rents up to market levels. Because just by doing that, again, here comes the appraisal. And many times they can get them appraised, pull out a bunch of cash, roll it over to the next project, right, Aaron? That's another strategy
But
that
yeah,
we'll talk about at some point.
definitely. Yep. They'll just continue doing it.
For those that are scared to do it, get them over the hump with 30 seconds left here.
If you're scared to do it, I know it's intimidating. The old adage, how to eat an elephant, it's one bite at a time. Call us. We'll walk you through it. By the end of the conversation, you're going to feel great and excited, and you're going to realize that the money you save is worth all of the worry that you had put aside. It's
That is
easy.
great, great advice. Perfect. All right, my friend. Well, quick reminder, everybody, don't miss the show tomorrow. We have the SpaceX IPO. It's going to be interesting to see what that rocket ship does. God bless. Have a great afternoon. We'll see you tomorrow on the John Sanchez Show.